Hey everybody, welcome to Mortgage Today for Wednesday, December 6, 2023, and oh, what a day it was. UMBS were flat again on the open. That's 3 days in a row of being flat, which has become kind of rare. Bonds had moderate ups and downs in the overnight session, but they stayed in a broadly sideways range between 4.16 and 4.21 on the 10-year. Heading into the ADP data, yields were around 4.19 after the data initial move was barely noticeable despite the obvious volume pop. Yields fell to 4.174, but have since given some of the improvement back, currently up 1.5 basis points after the first hour of trading today. ADP employment came in at 103,000 versus 130 estimate. It was 113 previously. ADP says more moderate hiring and wage growth in 2024. Interestingly, the leisure and hospitality sector, which has been the big driver for job growth post-pandemic, registered a loss of 7,000 jobs. Non-farm productivity was revised upward to 5.2% in the third quarter. Employment cost index was revised downward to negative 1.2. Wage growth is decelerating as job stayers reported making 5.6% increase in pay, the slowest since September of 2021. Job changers saw a 8.3 increase. This was 12 to 14 for quite a while. Manufacturing employment fell while trade, transportation, utilities, and education saw the biggest increases. Long story short, ADP was a non-event that did nothing to change the prevailing range or narrative. Stock futures did advance. Stock players saw this as a sign that the Federal Reserve is done with its aggressive hiking. Friday's monthly jobs report is currently forecast to show employers adding some 187,000 jobs in November. The unemployment rate is seen holding at the highest level in nearly 2 years. According to the data released this morning, a U.S. trade deficit rose 5% to a 3-month high and put it on track to be the lowest in 3 years. Higher deficit subtracts from gross domestic product, which shows the output of economic activity of a specific country. Yes, mortgage rates have come down a little, but maybe potential borrowers don't know about it yet. They have come down versus the treasury yields, which is nice, and now value analysts are saying that the agency mortgage-backed securities are a good value in this market and may be improving further. This is something we've needed for a while. Spreads to the 10-year T-note are still wide. Today, the 6% UMBS is yielding around 5.85 to 5.9%, which is 165 basis points over the 10-year Treasury. A glance at rate sheet shows that origination rates are about 7.1%, which is still 290 basis points over the 10-year. When that spread, which blew out in part because of the March bank problems that never spread, will start to come in, it peaked around 310 basis points a few months ago. Many experts see continued improvement, perhaps down to 250 basis points in the first quarter as demand for MBS outpaces the supply. Mortgage rates will never match Treasury rates, of course, due to the prepayment and credit risk, neither of which impacts U.S. Treasury yields. The European Central Bank is now pricing in 6 rate cuts next year, and the Fed funds futures are pricing in 5 rate cuts, which I don't agree with at all. German industrial numbers missed big time this morning, and it looks like we are in a global slowdown. The combination of friendly economic data, dovish comments from the Bank of Canada, and lower oil prices helped yields drift down to a 3-month lows this morning. In less than a month and a half, that brings the size of the 10-year yield rally to nearly 90 basis points. Is that too much too soon? The answer could depend on perspective. It's a big move in and of itself, but one would argue that bonds were brutally oversold heading into mid-October. One reassuring piece of evidence is the extent to which yields have remained calm and sideways on each of the past 2 afternoons after rallying to new multi-month lows. Either way, there is no debate about the data-dependent nature of the movement. With that in mind, Friday's jobs report remains critically important. UMBS ended the day up 13 basis points at 100.95. The 5.5 and 5.0 improved a little more, though still below 100. So at the end of the day, we're at 100.95 on that 6% coupon.